Morning, I'm Jason from daytradeideas.com. Looking at gold this morning, it's had a real good spike up, and that was continued this week with the Ukraine shenanigans. We've now retraced. You can see that the market peaked back in 2011 at 1920. We collapsed down to 1180. That was, let me see, that was sometime in the middle of last year. We had a double bottom, and then right at the beginning of January called a low for gold, and we did expect it to start rallying up after we saw this double bottom around good Fibonacci, longer term Fibonacci support. So we're pleased with this rally. It's actually gone a little bit further than I would have expected. It's pretty much gone in a straight line since the beginning of January, so it's been a really good couple of months for gold. But we're now hitting our first longer term fib target, 1355. We hit that yesterday pretty much bang on actually, and I think that's going to see the end of this gold rally. I didn't actually think it would get this far, to be fair, but I'd be very surprised if it got any further than this now. 1355 is also 55 week moving average, so there's quite a lot going on here. You can see we've got October highs at 1361, so it would really only be a break above these October highs that I would then start to think that gold can continue higher. But as long as we hold below 1355, which I do think is a good selling opportunity around the mid 1350s, if we happen to manage to get back up there again. We have sold off this morning, we're down around 1340, so we'll see what happens there. On the daily chart, you can see it wouldn't take an awful lot to get us down to the mid 1320 area, and then even perhaps over the next few days down around the 1315, 1310 area is certainly a possibility. Lower than that, I don't really know. Gold is in a decent uptrend, so I certainly wouldn't want to be fighting that. At this stage, it would just be a correction to the 2-month bull trend. We'd have to see more of a topping pattern before I'd start getting negative about gold. But I do, as I say, think 1355 will cap it at this stage. Dollar yen, I must admit, I've found quite hard to read. Haven't really had an opinion on it, but we are in a very clear downtrend, have been all this year. We haven't been able to break above this trend line. We've tried it on several days, as you can see, at the end of February, and now we've broken below the 100-day moving average. So I think all in all, it's quite a negative picture. We've had a good bounce back today. We've got this trend line here at around 101.85. We've got the 100-day moving average at 101.90. So that area has held today, and I think it will continue to do so. I would be more inclined to see this downtrend continue. Of course, if we close above 102.00, that would be slightly more positive, and we could at least target these two trend lines where they intersect at 102.15. But you'd really need to close above 102.15 to start getting positive about dollar yen. Otherwise, I think we can continue to sink lower. We've got Feb lows around let me see, 175 area, and we've got a little bit of fib support around 165 area. So those would be the main downside targets over the next week or two for dollar yen, I think. Thanks very much. Jason Sen, daytradeideas.com.